The average Canadian family pays 45% of their household income in taxes, and Canada is known as being one of the highest taxed nations in the world. Ranked number 25 out of 172 countries in the list of highest taxed countries in the world, Canada is on the upper third spectrum of the countries with the highest taxes in the world. And of course, taxes in Canada do follow a bracket tier system, so if you do end up earning more, you'll be in a higher tax bracket, meaning you'll be taxed more. So if you're a high income earner making over $250,000, in many provinces around Canada, you can be paying up to 50% of your income or more away in taxes. On top of that, you're paying sales tax on everything you purchase from 5% on the low end to 15% on the high end, depending on the province. So how can you stop paying these Canadian taxes? By becoming a non-resident of Canada. That's exactly what we'll be going over in today's video. My name is Cheyenne from GenZone, and we help individuals from all around the world set up their companies here in Dubai, obtain residency, become tax residents, open personal and business bank accounts to fully establish here in Dubai and start paying less taxes. So in order to stop paying Canadian taxes on your worldwide income, you must become a non-resident of Canada. But what's the process of becoming a non-resident in Canada? The Income Tax Act in Canada, which sets out the tax implications for Canadian residency and non-residency, doesn't actually set the exact measures that you must take to become an official non-resident of Canada. The main way that the government of Canada determines your residency status, also your tax residency, is through your residential ties. They state that the most important thing to consider when determining your residency status in Canada for income tax purposes is whether or not you maintain or establish significant residential ties with Canada. Now, there are two main types of residential ties you can have to Canada. Number one being significant residential ties. This includes having a home in Canada, being a primary place of residence that is readily available to you, whether you own it or you rent it or you lease it in your name. It's a significant residential tie. What this does not include and won't be considered as a significant residential tie is owning a home for investment purposes that you may just be renting out for investment income. The second significant residential tie to Canada can include having a spouse or common law partner in Canada. Even if you yourself are not living in Canada, having a spouse located in Canada can be determined as a significant residential tie to Canada for yourself. And the third significant residential tie can include having a dependent in Canada, which can include having children or anyone you take care of located in Canada. Now, the second type of residential ties you can have to Canada are known as secondary residential ties. Since Canada doesn't actually have a clear-cut system in determining your residency status, these secondary ties, or an abundance of these secondary ties, may or may not determine you as a resident or a non-resident of Canada. Of course, we recommend cutting off as many of these secondary ties as you can, but having some of these secondary ties doesn't necessarily mean you are a resident of Canada. Secondary residential ties may include personal property in Canada, such as a car or furniture, social ties in Canada, such as memberships in Canadian recreational or religious organizations, economic ties in Canada, such as Canadian bank accounts or credit cards, a Canadian driver's license, a Canadian passport, and health insurance with a Canadian province or territory. But of course, we don't recommend to give up your Canadian passport, as that is a lower level tie, and just having a Canadian passport doesn't necessarily mean you are a resident of Canada. And many of these secondary residential ties are lower level ties and don't conclude your residency in Canada, but having an abundance of these secondary ties can conclude your residency in Canada. So those were the two types of residential ties that can determine your residency or non-residency status in Canada. So the government of Canada states that you may be considered a non-resident of Canada if you did not have any significant residential ties with Canada and you lived outside of Canada throughout the year and you stayed in Canada for less than 183 days of the tax year. So if you're looking to move your company from Canada and establish residency here in Dubai, be sure to book a call with the link in our description, and our team at GenZone will be happy to help you.